Hello everyone, this is Brad McMahon with Trader Trading Headquarters. You are watching our free educational video series for traders and investors. All we ask in return is that if you like the video, like it, and if you really like it, share it with a friend. Please take a moment to read our disclaimer. The information provided herein is our opinions only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only. Now, the Dragonfly Doji is created when the open, the high, and the close are the same or about the same. And it's important to note that where the open and the high and the close are exactly the same price, it's actually quite rare. So the most important part of the Dragonfly Doji is that long upper shadow. Now, the long lower shadow implies that the market tested to find where the demand was located, and they actually found it. Let's take a look at the cues here. What actually happened was the bears were able to press the price downward, but there was an area of support, and when it was found at the low of the day, buyers were able to push the price back up to the opening, so the bearish advances downward were entirely rejected by the bulls. Now, the Dragonfly Doji is a helpful candlestick pattern to help traders visually see where the support and the demands are located. So in this example, we can clearly see that the bears came in, pushed the price downward, and then on this particular day, we tested to see where that support was. And we can look over and see that at around the $84 range, buyers came back in and pushed the price back up. Now, we did roll over again where the bears came into play, but again, we tested to see if there was any support. Buyers came back in, and then they pushed the price back up. So the way I would use this chart would be to see that we've got some pretty good support right here around the $84 range. So if you're a little nervous about this rollover here, you could use this support line, get some confirmation. Maybe when we break the trend line up here and we start seeing some support, we can put our money back into the market. Now, the Dragonfly Doji can also be used like this. So after a downward trend, the Doji can signal to the trader that the downtrend might be over and that a short position could be covered. So what we see here is we get a Dragonfly Doji and we move back up to an area of resistance and we shoot back down. But again, we're testing this support level, and you can see several of these candlesticks are testing that support level and pushing price back upwards. And again, we fall back down, we test for support, and the bulls come back in. And you can see on the very next day, we actually gapped up significantly. So this would be your indication that the bearish movement is probably over and that you'd want to cover your short positions. Hey, thanks for watching this video on the Dragonfly Doji. If you like this video and would like to learn more about stock charts and patterns, visit our website at tradertraininghq.com. Here you will find lots of information on trading the markets. Go to our training tab and you'll find free courses, articles, TradingView charts, watch lists, trade examples, books, and even a chat room. If you'd like to get a feel for our membership benefits, fill out this information here and create a password, and you'll get access to more free lessons. The free lessons include simpler stock trading for beginners, candlestick patterns, chart patterns, free introduction videos, webinars, and a trading community where you can access all of our social media links.